The stock market continues to rally, but why is this happening? There's one very good reason, and that is the Federal Reserve. I've been talking about this for a long time. I've highlighted exactly what's been happening here and why. It's because they tell you what will happen before it does. I'm going to show you the examples of that today and why this was extremely important for the next few months. If you watch closely, you can make the right investment choices. I wanted to begin by looking here. Now, Jerome Powell had come out, he had a talk in which he could have had the ability to suggest to the markets, hey, we're going to be tough, we're going to be strong, we're going to keep interest rates high for really long, and inflation might get high, so we're going to make sure that we stand strong. But instead, he bent over backwards, pushed over Powell, did not do a good job for that, but he certainly did a good job for the stock market. Let me tell you, oh my goodness, and investors, speculators, and people buying Bed Bath & Beyond are absolutely loving it. Look here, you can see the January US jobs report was so astoundingly positive on all fronts that it raised the prospect of more interest rate hikes later this year. And the stock market did not respond to that because they were looking at Jerome Powell. So he's talking, he's making the speech, he's saying, yeah, we're going to make sure that everything's tough and, we're going to kind of be tough about it, but we expect disinflation. Disinflation, meaning inflation is going to go down. Key takeaways from Powell's press conference. We are talking about a couple more rate increases. We're going to be cautious about declaring victory and sending signals that we think the game is won. Certainly is just not appropriate here. All of these three things essentially would add up to the fact that they're going to make sure that interest rates remain high for a period to bring inflation down. However, the computer algorithms read through this and they saw disinflation as the victory. They do not care what he says in certain ways. They're just looking for the key points to remove from that, to read it, and then go on and on. That's what they want. And the algorithms did that. And of course, the retail traders followed and the money followed behind that. These are the type of things that are happening today in the markets. I talked about this in September and October, that they would see this as the bottom of the markets, at least for a period of time. Who knows what happens down the road? And that's because of the Fed pivot. I specifically mentioned that in the posts or community section of the channel, and then I referenced that in videos following after this. If you've been on the channel, I know that you've seen this. It is very worrisome that the Federal Reserve is willing to create such a massive bubble. Fed Chair Powell says inflation is starting to ease, but interest rates still likely to rise. If we continue to get, for example, strong labor market reports or higher inflation reports, they won't get the higher inflation reports, likely, at least not yet. It may well be the case that we have to do more to raise rates, and that is already priced in. So the market believes approximately 5% on the Fed funds rate. And so that's what they've priced in. Okay, 5%, we're basically done. That's it. Let's get in now. Let's put in some cash now. Even if we lose a little bit, it's all good. But they're not pricing in more than 5. They're not pricing in 5.5, 6%, 7%, and that's so on. They don't expect this. If we do get there, then there's a problem. But the market's basically saying, forget it. I'm not going to bet on that. I'm not going to worry about that. I'm buying Bed Bath & Beyond today so that I can be rich tomorrow. Fed's Kashkari says strong jobs data shows the need for more hikes. He's saying 5.4% for the Fed funds rate. That's high compared to others, considering this is the guy who was so, he was just pouring gasoline on the fire. This is really, and now he's going to a complete 180, at least in the way he's talking. Right now, I'm still at around 5.4%. If I had to pick a number today, it'd be where I was back in December. He said this, I actually listened to part of the interview that he did, And they were kind of grilling him, to be honest with you, because the CNBC hosts, if you've ever watched it, I mean, the channel needs their advertising revenue and so on, and they were kind of like, hey, buddy, why you got to increase interest? Like, why you got to do this to us for? Like, we can't trust you. We don't like you. But the markets, they love Powell. They didn't love Kashkari today, that's for sure. They really didn't take anything that he said for any bit of seriousness. These are the things that need to be understood. It's what is the market actually going to accept? There could be something terrible that happens, but as long as they ignore it, it really doesn't matter. That's the way this market works. It's fictional. It is a fraud. It's being run by computer algorithms that are looking for the right data to pick and choose from. Here we have it. Don't overreact. No one should overreact to one report, but the underlying strength of the services sector of the economy is still very robust, and that's where I think a lot of us are focusing our attention. So the jobs situation, I mean, you look at their data, it's incredible, right? So why would they need to really worry about increasing interest rates too much? There's a lot of slack that could be taken in this way, right? But we'll see what happens. Okay. This is just a bunch of different data that I pulled up, but the point here is that Jerome Powell, Kashkari, they kind of wanted to go into that, we got to be tough, but they don't want to be too tough, right? They have to sort of balance this and what's happening, but I don't know, to be honest with you, I really don't know how they're able to do so when you know what the goal is. The goal is to create a bubble, to have an excuse when it pops to buy all assets. That is what this institution is for. Can you believe it? Like, just think about it for a second, how terrible this is. They were at approximately $9 trillion on the balance sheet. They're going to bring that down to what? 8.5, and they're going to stop there. The Federal Reserve holding on to $8.5 trillion of assets is a scary thought. It is very dangerous and should be regarded as something that, the public, the Congress, they should be saying to them, you got to drain that down. You can't leave that at 8.5 trillion. You got to continue, even at a slow amount, you got to do that. But they don't, and they won't. Here we have it, short-dated SPX volume as a percentage of the total. And this is just saying that, there's a lot of speculation. All you need to know about this is there's a lot of speculation going on in the markets today. People are buying these very short-term bets that the market is going to go up. And I really think that it's okay to speculate in a sense, but people do that with a lot of money, and they get burned. So many people, there's stories written everywhere about these people, retail speculators who were making all kinds of cash, millions of dollars during 2020, and have lost it all since. So you got to watch out. Now we look at the inflationary factors, economy. Wholesale egg prices have collapsed, while consumers may soon see relief. So wholesale egg prices have fallen by 50% since December. That is a good sign. Of course, they are just highlighting the bird flu that happened, disrupting the egg production and supply. There are other factors, of course, I'm sure. But that's what they're saying. Wholesale prices have come down, so we should see this reflecting at the stores. Pay attention to that, okay? We'll come back to it in the coming weeks. Zoom video to cut 1,300 jobs, or 15% of the global workforce. If you want to know what's happening with the job situation, I cover this almost every single day. So hit that subscribe button and we could talk about that in further videos. But it's not just about Zoom. It's not just about tech companies. This is going on all over the place. And I've got Ford as an example. The CEO's frustration builds as he vows to transform the automaker. We have to change our cost profile. We know what we have to go after. They have to be more efficient. What does that mean? They have to fire people. Maybe they got to close some locations. Maybe they have to increase prices. All these things are happening to all kinds of different companies. Meta asks many managers to get back to making things or leave, essentially getting rid of the management, making them do work and be more productive and not, I mean, have you seen some of these videos? There's all these videos out there that show, I don't even know if they're real, but there's like a day in the life of a Google employee or Facebook employee. And then the person's, it's 9 a.m. and they're having coffee and then they're playing pool and then they're like swimming and then they're like exercising. And then it's like, 12:30 and they're like having a meeting, but really it's just a party because somebody had a birthday. And then like the day ends, they're going out for drinks with their coworkers. It's fantastic. And then you ask the questions, like the video ends and you ask the question, when did they get the work done? Well, that's the type of thing that can't persist, okay? That type of thing, and I'm sure it's just a few examples, but the point is that type of thing cannot happen if you want productivity in a company, straight up, okay? And this is just showing us that the big four are increasing their loss provisions. JP Morgan, Wells Fargo, Citibank, and Bank of America, all increasing loan loss provisions. What does that mean? Essentially like saving for a rainy day. They know that people are not going to be able to pay their bills, so they have to save for that. They did so in 2020. And then there was all those moratoriums and things that were put in place, so they kind of got rid of that. However, we could see them kind of doing the same thing today. So we will see what happens. I'm interested in that, of course. Australia's central bank signals more tightening ahead after lifting rates to a decade high. So they are tightening even further. This kind of spooked the markets in a sense. The Federal Reserve doing something very different. They are telling people we're going to be real easy, push over Powell. He just wanted to make sure that he's as soft as a pillow, a little feather that's tickling you. I mean, it's just ridiculous. But anyway, we'll see what happens. I wanted to highlight right here today for you that what we can look at with the central banks, we can see what's going to happen before it does. That's why I was able to determine that back in September, October, because I was seeing the writing on the wall and I was looking at all the Fed speeches and I was seeing that they're not really going to be tough. They are going to really ease up at this point here. And when you could see, oh, they're going to do 50 basis points, they're going to do 25. You saw that progression. I was bringing that to you each and every day. And this is truly scary because this could absolutely generate a second wave of inflation as assets go and they elevate. Very dangerous. This is not wise, of course, and that's why you need to protect yourself. I will be bringing new videos out there that are, trying to help people into what they can do to try to protect themselves, having real assets, having a secondary income, and so on. If you want to know that information, all you got to do is hit subscribe each and every day. I bring you the latest and greatest. So I'll see you tomorrow. You came here for the truth. Take care.